Hello, hello. Hello, everyone. Can you guys hear me? I see that people are pouring in. I see Andrew, Miguel, Cody, Robert, Tony, Santosh, Jay, Nathan, Francisco, Stephen, Dale, Kevin, John. Wow, a lot of people are joining. Total of almost 600 people registered for the webinar, so I hope most of them will be able to join. We'll have a big group tonight. That's good. So there is a chat functionality, so you guys can ask me questions during the webinar, and I'll try to answer all of them for you. I'm really glad you guys could join in. I don't know if you guys read the last minute email, but yeah, I was having some struggles with the Google server. As you know, today was supposed to be about the premium value spreadsheet, and I promised you guys that I would walk you through the spreadsheet and show you all the functionality. But yeah, unfortunately, there were some hiccups. So not all the data was being loaded properly. That's why I unfortunately had to change the topic to the current presentation, investing breakthroughs. But yeah, it's gonna be a good webinar, I promise. And I'll just redo the spreadsheet webinar somewhere in the coming month or coming weeks. So Sam's first question is there going to be a crash in 2016? Well, I mean, who knows, Let's just, I'm going to try to give you some more pointers and tips, and then maybe you will be able to decide for yourself whether the market is going to crash. But I can tell you in advance that it is very hard to actually predict what's going to happen. But at least, yeah, I can try to give you guys some tools to, at least know what to do when something goes wrong. Fischel asks, what is the best and simplest way to calculate the intrinsic value of a stock? Well, I have a free spreadsheet on the website where you can calculate the intrinsic value using a discounted cash flow model. Or you can go to gurufocus.com. They also have a free intrinsic value spreadsheet. Yeah, Peter. Yeah, like a lot of people joined now, so I'm gonna say one more time the reason why I had to change the topic of this webinar last minute is because there were some hiccups with the Google spreadsheet server, which is why not all the data was loading properly. So I unfortunately cannot show you the value spreadsheet today, but I promised to redo that webinar, the webinar that you actually registered for in the coming weeks. So apologies again for that, but it happened, and I'm just gonna be honest with you. There's nothing I could do about it, and so I just had to wing it and change the topic for now. But yeah, I think most people are in right now, are in the webinar room, so let's just get started. First, I would like to ask you guys where you are from. I'm always interested to hear that. And people are asking, like, will the knowledge you gain from this webinar be applicable to other markets than the US market, like the Indian stock market? We have a lot of Indian people with us today. Yeah, absolutely. Like it applies to all the markets around the world. Okay, cool. Germany, Spain, UK, Singapore, South Carolina. I just came from South Carolina, actually. Holland, good. Chicago, well, all over the place. That's good. Okay, cool. Let's get to it. Yeah, so it's a bit volatile on the stock market at the moment, but yeah, I really think that what we'll discuss today will help you deal with that situation. So yeah, today's topic will be investing breakthroughs, learn from my mistakes. My name is Nick Kraakman. I'm the founder of valuespreadsheet.com. And yeah, despite the hiccups, I'm really excited to be here. Why? Because I hate to see people lose money by, making avoidable mistakes. And I know how hard it is to get started with investing. I mean, I learned the hard way and actually lost half my savings in the process. But now I consistently earn above average returns. And I just don't want you to make the same mistakes that I made. And therefore, today I'll share my story of how I got started and all the mistakes I made along the way and what you can learn from them, so that you can avoid those mistakes. And you will be ready to start earning some serious returns from the stock market as well. So, I'm from Amsterdam, the Netherlands. It's a tiny country in Europe, and it's a beautiful city, and it's known for its weed. I do not smoke it myself, so but English is not my native language, so apologies in advance if I ruin some grammar here and there. And yeah, I want to make this webinar interactive. Most of you have already discovered the comment functionality, so feel free to shout out your questions and I'll try to answer them as we go. And in the coming hour, I'll try to teach you as much as I possibly can. And after that, I'll show you how you can get more help if you wish. So let's start with the content of this webinar, my investment journey so far, and the sometimes painful lessons I learned along the way. So this is me with my two lovely younger sisters. And at this time, I obviously didn't know anything about investing. So 10 years ago, during middle school, I actually sat next to this guy. His name is Thomas, and yeah, you might be able to tell from his appearance that he is a business guy. He already had this in him back then. And in fact, this picture was posted in a Dutch newspaper in which he announced his new accountancy business. And back then, Thomas told me that his father invested in the stock market. And I didn't even know what a stock was, but it seemed like magic to me. You put some money in, and after a while, you get more money back. So I immediately wanted to start. So I searched the internet, and I found out that I had to open a brokerage account. However, I was 14 years old. I was younger than 18, so my parents had to actually sign for it, which they blindly did for I don't know what got into them, but they just didn't even ask me why or what or how. They just signed the paper, and I'm still really grateful for that, because that allowed me to get started on the stock market at a very young age. So now I had a brokerage account, a promise of easy money, and exactly zero knowledge about the stock market and how it functioned. So I obviously felt absolutely ready to put all of my savings on the line, which is exactly what I did. So yeah, my strategy actually was very simple back then. I just looked at a list of stocks and I picked the first one which had a name that I recognized, So obviously I had heard of Apple, I had heard of Google, just a brand. If I came across a brand, I thought, oh wow, that's an interesting one. So the next thing I did was I looked at at the chart, just the price chart of the last couple of years. And yeah, if it was cheaper than it had been before, then I just bought it. That was my strategy. So if it was a brand and it was cheaper than it had been before, that's when I bought the stock. And I got lucky the first few times, but obviously my luck ended quickly, and I actually lost a lot of money. And this brings me to my first breakthrough: buy a business, not a chart. I mean, stocks are simply parts of a business, but I did not realize that at the time. So I just thought stocks were things that wiggle up and down in price. However, price says little about the company, because price movements can be very irrational, and they often are. And yeah, so when a stock is cheaper than it has been in the past, that doesn't mean it is absolutely cheap. It means it is relatively cheap. And I can show you the difference. I mean, if a couch is selling for $1,000 and it gets discounted, it's now only $500. So it is now relatively cheap compared to the first price of 1,000. However, if the couch is only worth $100, then it's still expensive in an absolute sense, if you have to pay 500 for something that's only 100. So looking at price alone is not enough to determine if a stock is interesting or not. And yeah, so I was 14 years old. I had this very flawed strategy. And because I was 14, I also didn't have a lot of money to invest, which is when I realized that even if I made a good percentage return, I still did not earn a whole lot of money, mainly due to transaction costs. And yeah, I actually even went so far as to send, I even sent an email to my stockbroker and asked him, like, why are the transaction costs so high? Because, they were just eating away my profits. And obviously, yeah, he had a little chuckle and didn't even reply. And I don't blame him for that. It was a silly question. So that's when I actually found out about leverage. And I read about using options and turbos and speeders, all these products that allow you to earn more money with a little investment. It's leverage. You can have a 1% change in the stock price can lead to a 10% gain for you if you want. But of course, this mechanism also works the other way around. If the price declines by 1%, then the value of your option or turbo or whatever you're having may go down by 10%. So this game very quickly went very wrong, and this is how I lost half my savings in a matter of weeks. I see there are some questions. I'll just quickly see. How do you determine value? I see some people ask that question. I have an ebook on my website called How to Value Stocks. Remind me at the end of the webinar and I'll share the link with you guys. And yeah, Buffettology is a very good book, Vishal, so I love that one. Yeah, so let's continue. So I was just talking about how I just lost half my savings by using all these, leverage products. So I was not very happy, to say the least, but at least I learned a lot of things from this. So my second breakthrough is actually that I had this realization that there is really no shortcut to wealth. Quick and easy gains are things that everyone wants, but which is simply not possible to maintain in the long run. I mean, you can buy an option or a speeder or whatever and make a good return once, twice, 3 times, but at some point it will backfire and you'll lose everything you earned. And yeah, one of Warren Buffett's main rules is to not lose money, because it is actually very hard to earn back losses. I mean, if you lose 10%, it requires an 11% gain to earn back that 10% loss. If you lose half of your money, of your investment, it requires a 100% gain to earn that back. So, just never try to not lose money, and that's why you have to avoid those risky products. So slow and steady wins the race on the stock market, thanks to the magnificent power of compounding. So yeah, the third breakthrough is that what I learned from losing half my savings was that it might not be the best idea to invest every single penny of your savings at once. Instead, I now recommend people to only invest with money they won't need in the next 5 years. So start with a small sum of money and then automatically transfer a fixed percentage of your monthly income to your stock brokerage account. This really adds up over time. And this will allow you to steadily grow your assets and grow your returns while only taking a small risk. Like if you add $100 to your stock brokerage account every month, that's a smaller risk than when you just get started by pouring all of your savings into it in one go, So yeah, I do recommend if you set up this automatic transfer to your brokerage account, I recommend doing that at the beginning of the month, because yeah, that's when you miss it least, because at the end of the month you probably have no money left, and it will be a problem, and you might just decide not to transfer the money. So do it at the beginning of the month, otherwise at least in my case, I will already have spent it. Yeah, so let's continue. So yeah, after I lost so much money, I realized that I really had no clue what I was doing. So I needed a strategy. I mean, you do not drive a car without learning how to drive first. And it's the same with investing. So legendary investor Joel Greenblatt actually described my situation nicely. Choosing individual stocks without any idea of what you're looking for is like running through a dynamite factory with a burning match. You may live, but you're still an idiot. I think he put that very nicely there. Yeah, this led to a very important breakthrough, that you should first invest in knowledge before you invest in stocks. I mean, I lost half my savings because I had no idea what I was doing. I knew nothing about the stock market and was really just picking stocks at random. I was even using leverage to make things worse. I mean, Benjamin Franklin said that an investment in knowledge pays the best interest. And yeah, I found this out the hard way. But where could I learn about investing, and where could I find a good investment strategy? I mean, I tried the internet, but that was sort of like a drama, because there was contradicting information everywhere, and everyone was shouting someone else, and all the information was scattered and fragmented, and there were all these get-rich-quick schemes everywhere. But there was no comprehensive course which could guide me from being a beginner with no idea what he's doing to actually being proficient and being able to pick stocks with confidence, And then I thought the easiest way to become good at something is by studying what the best in the world are doing. So that's what I did. And yeah, this is how I found out about Warren Buffett, actually, the world's greatest investor still. He's the third richest man in the world, and he earned all his money with investing. So actually, how I came across him was with a newsletter, a Dutch newsletter about Warren Buffett. And this newsletter at some point also shared a free ebook about his strategy, how Warren Buffett looks at stocks. And his strategy was so simple, and it made so much sense. Like, his strategy is described with this very, I think, his best quote: "Whether we are talking about socks or stocks, I like buying quality merchandise when it's marked down." So his strategy is buy great companies at bargain prices, which is a very simple a logical strategy, which earned him billions, actually. And the reason why not many people apply this is because it takes some courage. Because while many people prefer to invest in companies which are hyped by the news and which everyone else is also buying, Buffett often buys companies no one else wants to own at that moment. You know, he sometimes says, buy when there's blood in the streets. So when everyone is running to the left, he goes to the right, you know, like it takes some courage. This is very scary, but at least it leads to the best returns. Because if you do what everyone else is doing, you'll get the same returns everyone else is getting. That's just how it is. Yeah, and I also started reading a lot of books on investing, like The Intelligent Investor by Benjamin Graham, one of the investing classics, of course, value investing classics at least. Benjamin Graham, for those who don't know it, was the teacher of, Warren Buffett's mentor, so to speak. He's sometimes called the father of value investing. And I also read The Little Book That Beats the Market by Joe Greenblatt. And my personal favorite, actually, The Dondo Investor by Monish Pabrai, who is also a very, very successful hedge fund manager. Let's see, I see some people are asking some questions. What's the PE multiple? What do you think about his recent purchase? Yeah, well, it's always like Warren Buffett's purchases, you can be certain that he thought them through. So it's always interesting to have a look at them. And I'm sure he had great reasons to buy Philips. But yeah, you know, it's I trust his judgment, but he is also his hands are sort of tied, you know, like he has so much money under control that he has to, whenever he buys something, it has to be big, you know, it has to be a very big company that he buys. Otherwise, it makes no impact on his portfolio whatsoever. So yeah, that's why he keeps buying those big companies that maybe you and I are not necessarily looking at. But it's the only thing he can do, really. Carlos asked if we can use my spreadsheet for emerging markets. At the moment, the spreadsheets only work for the US. And yeah, like I said, at the moment, there are some hiccups on the Google server. So at the moment, they're not working for any country. But I'm going to fix it, I promise. Or actually, Google has to fix it. So let's hope they do that quickly. But yeah, I read all those books, all those value investing books, and I realized that they were all applying. Actually, by then I didn't know it was called value investing, but I did see all the correlations. You know, they all seem to be applying the same strategy, which they called value investing, and it all became very clear to me, like what they meant. And so my breakthrough was that the number one way to really learn how to consistently earn money on the stock market is to study how the best in the world are doing it. I mean, for decades on end, they have proven that their strategies work, and there is just no better source of information than their words. You don't have to copy their strategy literally, but instead I would recommend following Bruce Lee's advice. Adapt what is useful, reject what is useless, and add what is specifically your own. Let's see, is it safe to invest in oil companies at this time? Well, is it ever safe to invest in oil companies? It's a trend, like oil is in a downward trend. It might just keep going for a little while, even though the price is already ridiculously low. But yeah, like oil companies, look at the financials. That's all I can say. If the financials are solid, if they can still make money even when oil is at a low, it's at an all-time low, then it might be interesting, you know. But yeah, it's a crazy market at the moment. And yes, Miguel, at the end you can definitely ask me about specific stocks, and I can have a quick look at them. Okay, let's continue. So just as I was buying my first stocks based on Warren Buffett's strategy, value investing, the financial crisis started in 2007, end of 2007. In fact, I actually bought some stocks on the day that the Dutch stock market hit its absolute peak. So my timing wasn't great, to say the least. The price of some of my stocks actually dropped more than 50%. And before, I would have panicked and sold them, but now I had the confidence that my purchase decision was right and that I would eventually still make money with these stocks. And I did. It took several years, but in the end, these stocks still earn me a nice annual return of around 15%, which is not bad for a beginner. However, I realized I had made a huge mistake again. The crisis made all kinds of stocks ridiculously cheap, and I wanted to buy them all. The only problem was that I was already fully invested and could therefore not benefit from the bargain prices the crisis had produced. I could also not buy more of the stocks I already owned to lower my average purchase price. As I said before, I still made money, 15%, but it could have been much, much more if I only had some money left on my account, to reinvest. Therefore, I suggest to always keep some liquidity so you can benefit from new opportunities when they arise. Something related to this is to never buy a full position in one go. So buy a small position first and then buy more as the price declines. So I usually, I at least split it up in two. So I buy, let's say, for $1,000, I buy a certain amount of stocks. And then if the price declines by 20% or more, I put another 1,000 in, just something like that. Just not go all in straight away. Yeah, and it was about this time when I went to university. I decided to study international business administration because, I like business, and by now I really liked investing, because I actually started to earn some money by applying the value investing strategy I had been reading so much about. And therefore, I decided to enroll in some finance courses as well. But I was a bit shocked when I heard what the professors were telling me. I mean, most of their theories were, or at least when you compare them to the value investing principles, they were just completely the opposite, and they were very outdated. There were theories like the efficient market hypothesis, the capital asset pricing model, modern portfolio theory. And you don't even have to know what they all mean, but just take it from me that it is contrary to everything what investors like Warren Buffett believe. For example, the efficient market hypothesis says that investors always act rationally and that stock prices always perfectly reflect all the available information. So according to this theory, it is impossible to consistently earn above average returns. But this is exactly what Warren Buffett and other great investors have done. So for my bachelor thesis, I decided to investigate whether Warren Buffett's success could be explained by sheer luck. And the result was very significant, that it could not just be luck, but it was definitely based on skill. So again, this goes straight against the efficient market hypothesis, which is still taught in universities. Therefore, my seventh breakthrough was this: always question conventional wisdom. I mean, if the majority of people believe something is true, this does not actually make it true, Always think for yourself and never blindly accept the things that other people tell you, and not even me, Always think for yourself and question everything. Okay, I see a lot of activity in the comments, so let me have a quick look. Yeah, I would love to analyze all those stocks using the spreadsheet. I can check later if it's working now, but at the moment, let me just have a quick peek. It seems like there's still some issues. So I'm not sure if I'll be able to analyze a lot of stocks during this webinar, but I'm gonna try. If the price Mike asks, if the price goes up, do you still buy another $1,000, for example? No, I don't, because wouldn't you rather get, like, if you have something, let's say a house, and it drops in price by 10%, it is more interesting to buy it, you know? If it goes up 10%, it is less interesting to buy it. And the same goes for stocks. I mean, if the price goes up, it becomes less interesting to buy it because, yeah, I mean, you get less stocks for the same amount of money. So, yeah, you always make most of your money when stock prices decline, but you only realize that a couple of years later when you finally get to see your returns. Do I combine value investing with technical analysis? Antoine asks. No, I do not. Technical analysis, in Warren Buffett's words, he once described it that if you turn the chart upside down, you get the exact same conclusion. So he doesn't believe in it, and yeah, I'm just following his lead, really. So I also do not use it in my analysis at all. When to average down? Yeah, when to average down? Like I said, I usually start buying more when the price drops 20%, when the stock drops 20%. And I definitely buy more at a 50% price drop. But then, yeah, only of course if the stock is still going strong, like if it's an irrational price drop. So if the price drops for no fundamental reason, you know, the stock is, the company is still doing fine, except, you know, the price is dropping. So that's an interesting moment to buy. Yes, there will be a recording available of this webinar. Harlan asks, how many stocks to keep in your portfolio? Yeah, I try to keep 10 or less in my portfolio. That way you can actually stay on top of all of them. And because, yeah, diversification is only for people who really don't know what they're doing. And you don't necessarily have to divide your capital evenly across all of those stocks. You can make a mix however you want. Varun asks how to find the intrinsic value of a stock. Well, you can use my spreadsheet, my discounted cash flow spreadsheet, which is free when you register for my email newsletter. Or you can go to gurufocus.com, and they have a free discounted cash flow calculator as well. What are metrics that I check? I usually use, yeah, I do look at price earnings, but I mostly look at like free cash flow, debt to equity ratio, and return on equity ratio, which are the most important two for me, really. Yeah, Franz said nobody became a millionaire with technical analysis, which is actually true. If you look at the Forbes list of richest people in the world, there are no technical analysts in there, but there are a lot of value investors in there. So how much time do I spend analyzing a stock? Well, that's why I use my value spreadsheet investing tool. I mean, I can run stocks through them very quickly because you just fill in the ticker symbol and the spreadsheet does all the calculations for you. And you can actually analyze the stock in a couple of seconds instead of hours, you know? So that's what I actually wanted to show you today. But like I mentioned before, there are some hiccups on the Google server, which is why I'm unable to show it to you today, unfortunately. Yes, I would love to make something for the Indian stock market, the spreadsheet available for the Indian stock market. But yeah, I just, I don't have the time at the moment, unfortunately. What about the price going down due to profit booking? Like from 40% up to 20% up? I don't really get that question. I'm sorry. So haven't you had any fundamental just down in price? Haven't had any fundamental changes. Yeah, I mean, if you have oil stocks that, like I said, Daniel, if you have an oil stock that is still able to make money at these low price levels of oil, and it's still earning good returns, yeah, then why not? You can definitely invest in it then. But yeah, do you get involved in bottom fishing? Wow, you guys are so active. I'm gonna try to go through them very quickly. What criteria do you use? Bottom fishing. Yeah, of course. Like if a stock is near its all-time low, that's always an interesting time to look at them. Most of the value is locked in microcap stocks. Can we trust company reported financials? Yes, you can trust you usually can trust the financial reports. Just always read through the footnotes as well, and just the proxy statement on the SEC website, just to make sure that they are not making up any weird, once they start mentioning things like, oh yeah, although we are making a loss, if you look at it this and this way, we're actually making money. When you see language like that, be careful. Also, always check the management's integrity, see if they have ever been involved in any scandals. But usually, you can trust the financial reports. My spreadsheet will not work for Canadian stocks, unfortunately. Dividend income. Yeah, dividend income is interesting, definitely, but only in certain situations. I mean, if a company is able to earn, for example, a 40% return on equity, I would prefer that it does not pay a dividend and instead keep that money for itself and reinvest it so it can earn 40% return on equity on it, So dividend can be good, but not only when a company doesn't have any other use for the money. What companies are good for investment in Europe? Yeah, that's not really an answer to that. You have to analyze all the stocks that are around, and I don't have a particular company in mind at the moment. Okay, I got a Facebook page, definitely. I can just quickly share it with you guys. Let me see, facebook.com/value. Yep, there it is. Okay, I'm gonna continue now. So those were a lot of questions. I'm gonna try to continue now with the presentation for a bit. So because I was constantly performing the same calculations for each company that I was analyzing, I decided to download a couple of Excel spreadsheets to speed up these calculations. And I tweaked them to my own needs, and I sort of really felt in control because I was now able to analyze stocks based on many of Warren Buffett's criteria in minutes and quickly decide whether to buy them or not. And I had some success with this. At one point, I actually analyzed an education company called Apollo Group, and I ran its financial figures through my spreadsheets, and it seemed like an amazing company to buy. I mean, it was highly profitable. It had little debt. Sorry, my girlfriend always points that out to me, that I say debt instead of debt. I mean, that's when it really comes out that I am not a native English speaker. And yeah, this stock, which was highly profitable, had little debt, it was also trading at a very cheap price. So I immediately bought it at a price of $56, believing it was worth around $90. Its stock price started to decline actually after I bought it, and I decided to buy even more because, when the stock price goes down, it's usually, and it's still a good company, then why not buy more of a great thing at an even lower price, And it wasn't until I lost around 50% of my investment that I looked past the numbers and found out that new laws had been issued, which meant that Apollo Group would most likely not be able to remain as profitable as it had been in the past. The company was also being sued and might have to pay a serious fine. So after the stock had dropped an additional 10%, I finally decided to take a loss and get out of this sinking ship. So what I learned from this is that numbers do not tell you the complete story. And I mean, while spreadsheets can really help you to speed up your research, there is much more to a company than its current profitability. So look past the numbers and also find out what the risk factors are. What could go wrong? I mean, you always have to do some manual research as well. So don't just blindly trust the output of your spreadsheet. Not even my spreadsheets, you just yeah, look at the numbers, recheck them, but also do some manual research. Like I mentioned before, see if there are any, in the case of Apollo Group, new laws being issued that may negatively impact the company's profitability in the long run, or maybe one of the managers is involved in some scandals or fraud or whatever. Just be wary. Don't just trust the numbers blindly. It's a good question for what are the guidelines for selling at a loss. Well, sell when you see that a company's fundamentals have changed, so actually its ability to be profitable has changed. That's a reason to sell, if that means, because that means that there's no way you will earn it back with that stock. It will just go lower and lower over time. So yeah, that's something that this dramatic trade taught me, was that you do not have to earn your money back the way you lost it. I held on to my Apollo Group stocks for way too long because I was afraid of taking a loss. And this not only forced me to sell at an even bigger loss later on, but it also means I incurred significant opportunity cost, because I could have, sold that stock and bought a better stock with it. So those were the opportunity costs. So whenever you find out you have a sinking ship in your portfolio, just take a loss and invest that money in a better opportunity. Luckily, I learned from this mistake, and I never have experienced a loss like that again. Still, I really believed in the power of spreadsheets. So I created an Uber spreadsheet by combining all the Excel files I was using, and I combined them into one. And this saved me a tremendous amount of time when analyzing stocks. And I used this one spreadsheet to rule them all very successfully for a couple of years. And that's the spreadsheet I was going to show you today. For example, I used it to find out this tiny company called Universal Insurance Holdings, which was trading around $6 per share, but it had $8 per share cash on its balance sheet. This meant that even if the company would go bankrupt the same day, I would still make $2 profit. So besides this wonderful situation, the company also paid a dividend of almost 10%. This was as close to a sure thing as I would ever get. Still, the stock price declined another 50%. And because I just suffered this major loss with Apollo Group, I was paralyzed and scared to buy more. Still, no matter how critically I looked at Universal Insurance Holdings, there really seemed to be nothing wrong with it. So finally, after 3 years of underperformance, the stock experienced a huge price appreciation. And I took a small profit by selling some stocks at $8, but I believe the company was still significantly undervalued, because like you may recall, it also had $8 of cash on its balance sheet. So I held on and finally sold them at more than $14 per share, which was a massive 155% return, including dividends. So even if you divide this by the 3 years that I was holding on to this stock, it's still an amazing return. So even though the stock underperformed for 3 years straight, in the end it earned me a huge return on investment. Just imagine how much I would have earned if I had bought more when the price declined. This is how I learned that you might underperform for a while, but that this does not mean the strategy does not work. So your annual performance does not matter. All that matters is how much money you ultimately earn in the end. And this was something all the books I read about value investing had told me already, but it wasn't until I experienced it myself that I started to believe it. Let me just look at I'm just looking at the comments real quick. A good platform to buy stocks for a resident of Belgium. Well, actually, I usually just advise to go to interactive brokers because they allow you to buy stocks on most international markets. So I'm pretty sure they'll also cover Belgium. They're just the biggest one around, and so they have the most stocks available to buy. So yeah, I do recommend them, interactive brokers. When calculating intrinsic value, should we deduct debt? Well, that's a very specific question, and yeah, I do deduct debt from it. Debt. Book value is not always a guarantee, says Sam. That's absolutely true. So book value, if you look at that, it's not the actual value of a business. It's just an accounting term, you know. How do you cope with very dissimilar valuations from different methods? That's a very good question, Miguel, because there is no specific or best way to calculate the value of a company. That's why I always recommend to use several different methods and then just sort of, you know, get a rough ballpark figure. It's never going to be accurate. It's just going to be a rough estimate. And that's why I always recommend to use, yeah, like I said, several methods, take the average or a reasonable figure, and then apply a huge margin of safety. So go like multiply it by 0.75 to get a 25% margin of safety, and then you'll probably on the right track. Dev asks, would you buy IBM? I have actually looked into it yesterday. IBM, I worked there for a while, so I know it's a good company, and they're currently their shares are very cheap. I'm thinking about buying once they drop below $110. Okay, Antoine says that interactive brokers is really good, so that's nice. What are over-the-counter stocks, OTC stocks? Yeah, for the ones who don't know, OTC is over-the-counter stocks. And yeah, they are stocks that are not necessarily traded on the big exchanges, and that's because, yeah, they're too small for that. I find it difficult to buy them because there's not always enough information available about them, and I need information to make decisions, so I usually don't invest in them. Let's say I subscribe to the value investing philosophy, understand how it is done and so on. However, let's say there are services that you or others may provide for a fee. Yeah, there are definitely services that invest money for you, or they have like portfolios that you can follow. I don't do that myself, but you could look at, for example, a website called fool.com. I'll just type it in the comments real quick. They have several services that you know, create a they have a value investing approach as well, and yeah, you can just follow their model portfolios. Okay, so let's wrap up this presentation. So yeah, around this time I read the 4-Hour Workweek by Tim Ferriss, which was an amazing book, and it was really an eye-opener for me. And while this book does not cover investing directly, it did inspire me to make my premium value spreadsheet available for others. So I made the spreadsheet more professional, added some extra functionality, and then actually started the website valuespreadsheet.com, which was about 2 years ago. So on my website, I write about value investing, and I try to help as many investors as possible to improve their returns based on the teachings of the best investors in the world. I also offer some free spreadsheets, videos, value investing resources, and yeah, the premium value spreadsheet. Also, I recently released, the investing, or recently, it's been a while actually, but I have a podcast on there. You can go to valuespreadsheet.com/podcast to find out more about that. And yeah, while I already knew a lot about investing because I read so much about it, writing all these articles and creating all these resources has taught me so much more. It really forced me to keep learning new things. And to quote one of my favorite authors, the man who doesn't read good books has no advantage over the man who can't read them. which is a quote by Mark Twain. And this is why I believe it is very important to never stop learning. And even if you think you already know everything, there are always new things for you to learn. And I don't mean that you should read about investing all day, every day, not at all. I believe you should learn a little about a lot. And this is something which Warren Buffett's business partner, Charlie Munger, also practices. So at one point I heard him say in an interview actually that his kids sometimes call him a book with legs, and he just reads about all kinds of topics, not just investing. So never stop learning. So well, I started applying a value investing strategy in 2007, and I have been consistently earning above average returns ever since. And to give you an idea, here is a list of some of the companies that I owned, including their returns, including transaction costs and dividends. Let me see. There they are. These do not include my current holdings, and this list is a little bit outdated, I must say. But yeah, as I said, I had to, give this I just changed the subject of this webinar, so I just had to, pull this out, this presentation, so I didn't have time to update it. Yeah, and I've been doubting for a long time whether or not to show this list, but I do think it might help to bring my point across that. And you have to keep in mind that these figures do not tell the whole story, because obviously some of these returns I earned in a matter of months, while some took several years to accumulate. Still, on average, I have been able to consistently earn returns in excess of 20% per year since 2007. And remember that that period includes the financial crisis. And I absolutely don't tell you this to brag or about how good I am or whatever. I only show this to you so you can get a feeling of what is possible if you consistently apply a value investing strategy. So during this presentation, you learned that I absolutely sucked at investing. But because I studied how the best in the world earn money on the stock market, I managed to earn these returns. And there's nothing magical about this. The strategy is super simple. All you do is find great companies selling at discount prices. And you can do this as well. You can earn these returns. And at the beginning of this webinar, I promised to show you how to get more help if you want it. And like some of you will probably have already done this, but those of you who haven't, I want to tell you about my Value Investing Bootcamp video course. This course takes you from a beginner who knows nothing about stocks to a confident investor in just a couple of hours of quality video content. I really spent a lot of time creating this video course. It took me 3 months of full-time work to just put all my knowledge that I gained over the past 10 years into one comprehensive package. Yeah, and the regular price of this video course is therefore $179 because, like I said, I spent years acquiring this knowledge and months to repackage it into this video course. And this might seem like a lot at first, but if this course helps you to just make one good investment decision or prevent you from making one big mistake, you will have already earned the money back. However, because you are part of this webinar, I am offering you my entire video course for a mere $47, which is a $150 discount, and this is available for the next 72 hours. If you go to valuespreadsheet.com/course in capital letters. Let me just also pull it up for you on the side of the screen. So, okay. So yeah, there's a 30-day money-back guarantee. You'll have lifetime access to all this content. There's like several hours of video material. It really, really contains all the knowledge I have about value investing in one comprehensive package. It contains a 25-point investment checklist that I use to analyze a company, just from analyzing its financial statements to analyzing its management. It includes a spreadsheet which with 3 intrinsic value models. So that spreadsheet can help you analyze the value of a stock to know if you are actually buying something cheap. And yeah, it says 1,100 students, but by now, this was the last time I gave this presentation. I had 1,100 students. At the moment, they are, if I'm correct, let me see, 8,700 students. So that's a whole lot more. So yeah, I'll show you. So go to valuespreadsheet.com/course to learn more about that. Let me just bring it up on the screen for you. Let me see. I'll just open a new. Whoops, new incognito. Okay, there we are. It's the course is hosted on a website called udemy.com. Value Investing Bootcamp. Let me just go to the link that I just told you about, valuespreadsheet.com/course. And you'll see you'll be redirected to this page, but then the price will be lower, 76% off, as you can see here. I currently have 105 ratings, reviews, and yeah, as you can see, I have a 5-star. Most people gave me a 5-star rating. So yeah, apparently people like the course. Just if you're on this page, I recommend that you click full details and just read through all the information that I shared here. You can figure out what the course is about. Yeah, as I said, there are, if you, at the top, you can see that there are 8,746 students already, and that normally the price is, yeah, this is in euro, but normally it's $200, and now it's just $47 for you guys using the coupon code. I don't know why it's more expensive in euro, but that's just Udemy doing his thing. Yeah, so it would be great if you could take this course to help you make 2016 one of your best years yet, money-wise. Like I said, I really, let me just show it to you in a normal browser window. So I'll go to Udemy Value Investing Bootcamp. So I can show you what it looks like when you're actually registered. So here on the left, you see all the lessons that are in there. Short introduction to value investing, why you are probably better off without an advisor, why most people lose money on the stock market, defining your investment goals. There's an ebook about the 10 best investors in the world. I also included quizzes, so after every section you get some quizzes to test your knowledge. This is about valuing a company, why stocks get mispriced, but also how value is, created and how to calculate it. This also includes the How to Value Stocks ebook, and if you click one of them, you just go to the video page. You can start playing the videos. Here's the intrinsic value spreadsheets you can download with all the valuation models. There's something about risk and reward, like how to minimize your risk when investing. A lot about financial statements and what figures to use when analyzing a stock. When to buy, when to sell, that's one of the most important questions, of course. And here's the investment checklist I told you about. And there's even some bonus material, ebooks and videos. So you get a lot of value actually for, like I said, $47 at the moment. So let me just go back to the presentation real quick and see if there are any questions from you guys. I'm guessing there are. Let's see. Here's the chat. Yeah. Okay. I have to scroll back a little bit to see what you guys all said in the comments, because it's a whole lot. How to read balance sheets of banks. The debt is so high it gets confusing. Yeah, even banks themselves don't know how to analyze how much they are worth. So I personally just stay away from banks altogether. What's the best way to convert Canadian dollars? Well, no idea. Just I have no idea how you can. What's the best ways to convert money? I don't really do that often. PayPal usually does it for me, and they always screw me over with the exchange rate. Buffett mentioned that he buys companies that he likes. Yeah, he doesn't necessarily buy companies that he likes. He just buys companies that he understands. He buys companies that are what he calls in his circle of competence. So, he does know. That's why he loves the simple businesses. Like he owns Sears or Sears Candy, so a candy maker. They make candy. It's very simple. How do they make money? By selling candy. It's very simple. He doesn't invest in tech stocks because he doesn't understand them. So that's what he means with that. Peter Bevan mentions that, yeah, what kind of business should we invest in now? That really depends, but actually, like I mentioned before in the presentation, only invest in companies that are great, that are highly profitable, that have low debt levels, and that are selling very cheaply. That's the companies you should buy. This is the same course as on Udemy, absolutely. And that's what I said. Like, I understand that some of you guys have already taken the course, so I'm really glad that you did, and I hope you all liked it. I mean, judging from the reviews, most of you guys enjoyed the course, so that's why I'm now offering this deal to the rest of you folks. Let's see. I bought it. Perfect. 5-star. This is the course on Udemy. Yep. Is this course the same? Okay. most questions are similar. Let's see. Will you apply value spreadsheet to European stocks? I would love to, actually, because yeah, I live in Europe. So the only reason why I chose to make value spreadsheet for American stocks is because there's just more financial data available. So it was easier to build it. That's really it. So the spreadsheet only works for United States, US listed stocks, so Nasdaq, Dow Jones, those kind of things. Are you coming to Omaha for Buffett's annual meeting? I would love to, but not this year, unfortunately. Does your course work the same way for Singapore stock? Yeah, absolutely. Like the course covers details about value investing, and those principles apply all over the world. There's these are timeless principles. They will work today, they will work tomorrow, and they work on every market around the world. Sam from Sweden. Yes, I'll remember you. What do you think of Guru Focus severe warnings? I don't know necessarily what Guru Focus severe warnings are, but in general, I really like Guru Focus and I love what they're doing. They have a great website and I use them a lot. Where do I get my ideas from for stocks to invest in? Well, I just use stock screeners. So you can go, for example, to finance.google.com. Let me just type it in there. And if you look for, there's on the left side of the screen, you can find a stock screener. And I just look for companies with high profitability, high return on equity, and low debt to equity. That's where I get my initial ideas. Thanks, Toma. I'm glad you liked the course. Updated version of the course. Well, if you have any suggestions on what you would still like to see in the course, then yeah, sure, I'll do that. There's also a deal on the value spreadsheet, absolutely. But as I said, at this exact moment, it's not working as planned. But I can give you the URL nevertheless. valuespreadsheet.com/big deal. I think this should be the link to the discount on value spreadsheet. Before running stocks through your spreadsheets, do you do a scan, is what Mike asks. Absolutely, that's what I meant with the stock screener. Yeah, I use a stock screener to sort of narrow down because there are thousands of stocks out there, so you need some sort of filter, you know. That's why, yeah, I just use some basic screening criteria using a stock screener, and I then run all of those stocks through the value spreadsheet, which usually goes very quickly because, yeah, you can literally run them through the spreadsheet in a couple seconds. So you can go through a list of 30 stocks really quickly. Yeah, that's usually how I do it. If we already took the course, can we get the intrinsic value spreadsheets? Well, they are part of the course, so if you already took the course, you can just download them, right? From the, I think, let me just quickly see. It's lecture 9. If you click on it and then click on the download icon, it should be there. Let me see. I can't see the chats. You mentioned in a previous podcast you used a different website for ideas that rank stocks. Yeah, I use Guru Focus, finance.google.com, jetta.com, which is a new one. Yeah, those, mainly those. Let's see. Could you please repeat what criteria you use in the screener? Yes, I'll just quickly type them out. Return on equity higher than 15%, debt to equity lower than 0.5, and yeah, current ratio higher than 2. So those are my those are the initial screening criteria I use. Oh, does it say that the offer is no longer valid? That's not good. I'll get that sorted out. Guru Focus. Are we going to be mailed the link with the recording? Yes, you'll get the recording link right after, like within 24 hours after this webinar finishes. The course can be followed at your own pace. They're just a couple of video lectures, and you can take them whenever you want. Return on assets is also interesting, but I use return on equity. I prefer that metric, actually. Let me just quickly see if I can fix the link to the value spreadsheet discount. Big deal. Well, I would just like to thank everyone for joining me today. I mean, it was very interesting to have this chat with you guys. There were a lot of people during live and with us today, and it was great to hear all your questions and to be able to hopefully give you some interesting advice. And again, apologies that it wasn't the topic you signed up for. I mean, we were supposed to talk about the premium value spreadsheet, but yeah, there were some technical issues, so I decided to switch the topic. But I still hope you enjoyed it. And yeah, again, I put all my heart and soul into this video course. Everything I know about value investing is in there. So $47 is a very good deal, and yeah, it would be great to see you as one of my new students. So go to valuespreadsheet.com/course to, be able to take part in that that deal. Let me just see what. I'll just redirect you guys if I know how to do that. But yeah, so thanks again, and I'll let's see if there are some final questions I can answer for you guys. What is the fastest way to analyze stocks in 1 hour that is worth buying? Well, I would say my value spreadsheet. When it works, it's definitely the fastest thing I know. You just fill in the ticker symbol, and the rest goes automatically. I can just maybe share a. I mean, if you look on my YouTube channel, you will find. I'll just quickly look it up for you. There's like a replay of a previous webinar I did, and in that webinar you can see what the value spreadsheet actually can do, what it can do for you. Value spreadsheets. Yeah.
So the presentation today.
Let me I'll just post it here. Boom. And that's a link you can check out the replay of a previous webinar I did about the actual spreadsheet. So have a look there. Maybe you find that interesting. Yeah, the Excel sheet that is part of the Udemy course is also included in this special offer. Thanks, Mike. I'm glad you liked the course. And yeah, Rafe, it's no problem that you missed it. You'll get a replay link within, within a couple of hours. So it should be good. Thanks everyone for joining us today, and have a nice evening. Bye-bye.